The only thing worse than stock market forecasters or weathermen, I pay no attention. It's like a random number generator, whatever they're saying. It just drives me insane.
Yeah, especially in Michigan, they're awful. It's
Yeah, it's
never good.
horrible. It's horrible. So anyway, let's get into this quickly.
Okay.
We can talk about my conference later if we want to, but I don't really want to take away from Michael. It's a real privilege to have him with us today. I'm not trying to blow smoke up his backside, but dude, we had a ton of people pre-registering for this thing. So,
I know, I
um,
saw that.
yeah,
Huge
yeah.
numbers.
So, at last I saw it was like 375 or something like that. It's one of the biggest rooms of the year, I think, if people show up. And the only one that I can remember was bigger recently was Steve Eisman, and he has an unfair advantage because he's a movie star. So this is pretty impressive stuff. So Michael is no stranger to FinTwit as well as the financial world more generally. I'm going to dispense with his bio and the whole deal, but what I find really interesting is his career path, how he's come to the world of money management. Going from virologist to trader to now he's also, I think, developing some funds, whatever. So it's really, really interesting. And I like about Michael, he calls them like he sees them. Neither bull nor bear. He's an opportunist, just wants to make money. And like all of us, he gets some right, he gets some wrong, but he's got more than his fair share of really great calls. And so, Michael, with that, I want to welcome you. Good to meet you, Michael. Welcome.
Thank you so very
Welcome.
much, George. Appreciate
Yes. No, this will be great. This will be great. So, Michael, I think we should just kind of like free form, like pick up basketball. So we can just go into fireside chat mode if you like, or if there are a few key points you want to make up front, which may
Well,
preempt
there's a
some of my
lot to talk about.
yeah. So why don't you just rant for a couple minutes because I'll probably preempt a lot of the questions I'm going to ask you, and then we'll get into it. So
Sure.
as people know, I'm not shy. I'm reliably informed. I talk too much. I ask a lot of annoying questions, so don't worry about it. We're not going to be at a loss for words here. Michael, the floor is yours.
Thanks. So, for those of you that don't know me, my name is Michael Taylor. I ran a hedge fund for most of my career, mostly out of Millennium and Citadel. And I did healthcare as a specialty, which is, you'll laugh, a rough count of the number of dedicated hedge funds to healthcare plus meaningful size pod books, guys running neutral books, is around 125 right now. How many individuals like me are out there? When I started doing that, probably in '07, that was the first time I had my own book. I did it beforehand, but not as a PM. I think there might have been 22, maybe at the time, maybe 25.
Michael, that is insane. It's like I like to paraphrase a line from the old Lexus commercials. The relentless pursuit of perfection. It's the relentless pursuit of alpha. And so, if there's 125 smart guys like you out there doing this, okay, but let's say they're younger and they want to work hard and all this kind of stuff. It was a lot easier pickings back in the day when there's only seven. No.
Yeah, well, think of it more like this. In the entire healthcare sphere of companies, there's about 140 that trade over $5 million of stock a day.
That's almost as bad as like they talk about the ETFs. Like there's more ETFs than
Yeah.
stocks, or whatever the crazy number is. Go ahead. Yeah, go on. Yeah.
Yeah. So, funny thing, if you look down, I'll just rattle some numbers off for you in SMID cap health biotech drug space. 13, 12, 12, 13, 6, 6, 8, 15, 21, 9, 6, 8, 6, 7, 10, 13, 19, 13. All of those numbers represent the short interest in those names. And I was just rattling down by market cap.
Oh,
Probably
holy
99%,
smokes! Good.
99% of that are those 120 books.
That's crazy. All right, keep
Yeah.
going. Yep.
So they have a position, positive or negative, and meaning long or short, in everything. And you figure that's just the short interest. The long interest on the other side is probably a third larger, net. And so you figure they're short, all 6 to 15% of the shares, and the other side of them are long 20%. So those hedge funds essentially control a third of the float of any stock in either direction, and
Wow.
on any given day. And no, that's not on any given day. That's a third of the entire float. So on any given day, the vast majority of movement in these names is them.
See, Mike, it almost means that, yeah, paying attention to the fundamentals, of course, because at the end of the day, you are a fundamental investor. But at least in the short run, you got to be more concerned about psychology and game theory. This is craziness.
Well, right now in healthcare, it's like who's blowing up and who's, because there's the healthcare is a very, very specific animal. It's a space that's under a bit of duress, more political duress and things like that, that may not end up being so meaningful. But it's also a crowded alpha space like consumer. Consumer and healthcare are the most crowded by the hedge funds and pods, because you can figure out a lot of alpha, and there's massive dispersion between the performance of these businesses because they're all idiosyncratic, meaning they have nothing to do with each other or very little to do with each other, all unique. So there's a lot of alpha there for these sort of funds. And when you have a whole industry that's under a little political duress, like we have now in healthcare, you can see, you can see 25% of those books being exited over a year or so, and that liquidation causes a lot of crazy movement in stocks, and we've seen that over the past year, and I think that this will persist for some time. There are a lot of macro forces at play outside of healthcare that are going to play to the cost of capital and so forth, and we'll cover a ton of that, I'm sure, in this call.
That's great. So, Mike, what you're saying is there's a lot of juice. I mean, there's beta, there's juice, there's movement. Because when
Yes.
things are placid, like in consumer staples, it's like boring, boring. We all, as a financial operator, you need volatility to make money, and hopefully, you can take advantage of it.
Yeah. Well, so to finish out, I did drug development before I went to Wall Street. About 29 years old, I was very fortunate to have worked on two drugs that made it into humans, and learned an awful lot, and said, well, this I don't want to do this for the rest of my life, working on things that nobody can understand except for a room full of people, a small room full of people. And so I discovered that you could bet on all this stuff, and that's when all the light bulb went off. And so I went to business school, learned what finance was. I found myself very quickly at the head of healthcare at Oppenheimer Funds, and that was around 2000, 2001. And then within a few years, I made my way over to hedge funds, and that was it. And you're also, I have to urge and warn the audience, who you're listening to is someone who survived. And so there is massive survivorship bias in how I did it and what I think. And whether I'm right or wrong or just lucky, don't take every word that I say as the gospel, because I am just slightly more right than I am wrong, and generally speaking. And that's the best you can do. And I'm just like you, trying to figure this out, looking at my tools and betting accordingly. The difference between many of the listeners and myself is that I've done it in a professional fashion for 25 years.
It's terrific. So, Michael, with that, let's move to, I don't know how you want to play this. You want to talk about the market first, set the context, or whatever, macro, RFK, Maha, whatever. I mean, however you want to go with this.
Okay, well,
I'm
let's
easy.
let's alert the audience that what has been happening for the past 10 years is absolutely not normal. Okay, and I don't mean just stocks going up. First of all, that's not normal, but there's reasons why it's not normal. And what is completely abnormal is that we no longer have economic cycles. The government, our federal government, has grown to such a level that we can no longer have economic cycles. And they have painted the tape, if you will, to prevent economic cycles. You may think that this stock market recovered because Trump was going to backpedal on his tariffs in April, and we had that big V bottom and it ripped. That wasn't really what moved the market. What moved the market was the government budget. That's what moved the market, because we had been anticipating a $500 billion cut to spend. And literally to the day we found out that it's going to be a $500 billion increase to spend, that's when the market took off. The government federal budget is the arbiter of the direction of our economy. It is no longer what industry does. And I will give you a little factoid, and you can back it out in your math. A family of 4 in America. So if you take the per capita, every person in America, boil it down to a family of 4 for each of them. Each family in America, in aggregate, including corporate taxes, so it's per capita, we are paying $60,000 per family in taxes to the government. And that comes in many different ways, but it works out to about $60,000 per family of 4 in the U.S. That's our taxes that go to the government. What you receive back, though, is $90,000
What? Wait, whoa, Michael, for emphasis, please repeat that again. That is staggering.
per capita. We're putting in about $60,000 per family of 4 on average in America, and what you get back from the government spending is $90,000.
No problem, right?
Yes. And how do they do that? Well, they have this magical thing called the Treasury debt market, and they borrow that money. And that's what has happened over the past 12 years. That is what's happened. And the number is so giant now that they can't stop spending. Because if they just tilt it a little bit, we will be in a horrific recession. And that's what Trump realized when he's putting this budget together. He goes, well, if we cut $500 million from the budget and actually get fiscally arranged so that we don't lose control of our bond market, what happens? And Scott Bessent said, oh, we're going to have a recession, but maybe it'll be a mild one. And that was it. And that's where we're at now. The government determines if we're in a recession or not.
We basically outlawed the business cycle, is what you're saying.
Well, it gets worse.
Okay. What as they say, Michael, wait, and there's more. Keep going. Sorry. Keep going.
It gets worse because, we have essentially full employment and a government that will be spending around 8 to 8.5% of excess GDP. So imagine our economy runs at 100. With the government overspending, it makes it equal 108.5. And that number is so wildly gigantic that we have to borrow for it, that if we did have an economic down cycle, the tax base frequently gets cut in half during those periods of time. So right now, the government is borrowing 50% more than it brings in taxes. If we had a recession, they could be easily spending 100% more than they bring in taxes. So they'd have to borrow a lot more and lose even more control of the yield curve. Japan's a little bit there. Well, actually, they're a lot of it there, but they're in a different realm of how they allocate for their treasury buying, called the JGBs. U.S. treasuries, we'll find out the hard way. About 42% of the U.S. treasuries are issued overseas. And this is one of the big points that I wanted to make to the public because they haven't talked about it yet, that we are barreling towards a very, very, very meaningful reckoning on the long end of our yield curve, much like Japan is right now, except the U.S. will probably be worse because we have to find a buyer outside the U.S. for about 40% of the issuance. And the reason why it's going to happen very soon is because of the breakdown of the mercantilist trade relationship. And that's the tariffs. So imagine that last year, the OUS, they had to finance $1 trillion. And they received about $1 trillion in trade. And so they took that $1 trillion and they recycled it into treasuries. And we're okay. New issuance, by the way. This is not existing. This is new issuance. It's about $1 trillion. The following year, that number, which will be for 26, is going to be around $1 trillion, let's say $1.2 trillion. So about 20% higher. The at issue is that because of these tariffs, the mercantilist trade breaks down. So they no longer just have $1 trillion of new money coming to them. It's more like 900 billion. So it's going down. Commerce is going down. So they're going to have fewer dollars in order to buy more treasuries that are being issued. So they're going to have about a 20 to 25% gap in the dollars they have in hand versus the supply of treasuries. And I don't know how acquainted you are with bond markets, but bonds get priced, especially treasury bonds. They get priced based on new issuance. So when old issuance doesn't move a whole lot on its own, everything moves when a new issuance sets a new price, and the entire spectrum will move. And I expect to see mayhem on 7-year plus bonds, maybe even a 5-year plus, but 7-year plus bonds over the next year.
Wow, so this is a 2025 event. This is not like, way out in the future. This is coming soon within
No,
a
it's going to
year.
start. It'll start right away. In fact, we might even get a glimpse of it on Thursday. So, in the meantime, though, but Scott Bissett, and he's a fella I know from before he was a candidate for Treasury. He used to be the boss of one of my best friends, and you may know that guy. His name is Mike Green, and so anyway, Scotty realizes this, and he says, "Oh shit, I need about $1 trillion more liquidity on the short end." So what he's going to do is lever up the banks by relaxing their standards so that they can buy more treasuries. And he has to do that to hold the short end. Now, the problem is, as you know, the duration is going to be short, though. That'll be sub 4-year duration that he'll be able to get that plate spinning. That will buy him 1 year, by the way. And I don't know what he's going to do about the long end, though. So that's going to be a real problem. So I expect him to, just like Yellen, to really move to finance everything on the very short end in order to prevent calamity. And much like Japan, the long end of our yield curve will get glass thin, just like a thread. Just like where, in the Japanese market, which used to be a very deep, rich market, stuff on the 10-year, 20-year out there in Japan, sometimes it doesn't even trade in a day.
Right.
Just no volume whatsoever. And that's what I think. But at issue, 40% of that issuance, new issuance, has to be found a buyer outside the US. And the way the trade is going to look moving forward, I am not sure. No, I'm not sure. I'm confident they will not have the dollars in hand. So they are going to have to sell their own currencies, buy dollars, and then buy this new issuance, which means that the yield, the price has got to be higher. The
Right.
yield must be higher. And
Right.
that's the beginning, because when you look out 1 year and 2 year and 5 year, the numbers just get worse and worse and worse.
Yeah, no, I agree
So,
again. The bond market. I've been consistently negative on bonds, bullish on gold. I suspect we have a lot of similar views. So Michael, let's bring that over to equities because most people in this room look at equities. Bonds are boring. Well, they're about to not get boring. But what does it mean for equities in your view? What you just laid out.
well, we're good. We're good because the government's spending a whole bunch of money, and you're going to have some changes, um, meaning changes to the distribution of who gets what. I think that the lower end, certain lower end products in consumer land are going to do better. A lot of folks are getting very specific tax breaks that will help certain areas. But the housing market is going to be dead for the foreseeable future, unless unless the economy slows down greatly, which also may happen because we haven't seen the impact of the tariffs yet and this disruption. There's a big delay in when you see it, and we'll start seeing it at the end of this quarter and third quarter, fourth quarter. So that may be disruptive. But so long duration assets like houses and durable goods are would normally be pretty super crap, but in this tax bill we have a big depreciation benefit. And so that is going to be pulling forward a lot of durable, long duration goods. And so, what is going to work, in my view, in this market is going to be AI tech, of course, because that's what everyone has to chase, and cyclicals, anything having to do with reshoring and build out. And I have many, many names involved, and certain consumer areas are going to be good. And then ultimately, when it comes to healthcare, which I run the Pink Fund, and for those of you that don't know, the Pink Fund is an ETF, and the net fees from that ETF and my compensation goes to the Susan G. Komen Foundation for Breast Cancer. And so for healthcare, in my view, I think that we're going to find out in the very short term that the most favored nation pricing for drugs is probably not going to happen in the U.S. and we'll probably have a pretty good resurgence in healthcare because of it. There's a lot of fear built into the market.
So, Michael, tease that out a little bit. Probably won't happen. Could you speak to that a little bit?
It was explained to the Trump White House what happens if they do that. So Trump had this idea, and this is what he does. He has an idea, and it's a fairy tale idea, okay? But he likes to throw it out there and see what sticks. All right. And so his view was that he doesn't want Medicare and Medicaid to pay for these drugs. So I want to save some money. And so what he said was, well, we're going to reference price all these drugs to the European drugs. And the pharma company said, yeah, you're going to basically put us out of business because we almost make all of our money here in the US because the prices of the drugs are much, much higher. It pays for all of our research and innovation. And Trump's like, well, I tell you what I'm going to do. In these negotiations, I'm going to force them to ramp up their drug prices big time to offset the drug price cuts in the US. And Trump is now running into the problem of how impossible that is. It's very, very, very difficult just because when you're negotiating with Brussels, for instance, on European trade, Brussels doesn't control drug prices. Independent countries control that. Poland, Czechoslovakia, all these other countries. They control their own negotiation on drug price, not Brussels. So it would be and it would require legislative changes, which are just not going to happen. So I think that Trump saw how long this is going to take and probably never happen. So, and honestly, it doesn't save Medicare a whole lot of money. The drug cost issue is not a big, big piece of healthcare. The vast majority of healthcare dollars are spent in your last 3 years of your life, and it's mostly at the hospital.
Yeah, Michael, on that point, I remember I'm a generalist and I'm jack of all trades, master of none. But the point you just made, could you just elaborate on that a bit? Because I remember a number of years ago looking at this, and the drug piece of it was like, I don't know, it was like only 15% or something like that, or 10% of total healthcare spend. It was like
That's right.
nothing.
That's right.
It was like nothing.
It's nothing. It's
Right.
nothing. But it politically, it's expedient. So Trump, remember, Donald Trump doesn't read anything. So he just knows that everyone's upset about drug prices. So I'm going to go fix that. How much is that going to save us? And then, Scott Bessent has to turn him and say, well, we can, if we hack these guys by 25% on all their drug costs in the US, we could save 2% on Medicare.
Oh, great.
And Trump would say, what? Exactly. Because he doesn't read anything. So
Oh, God.
he doesn't know that. He just assumes if it's something that really upsets the public, it must be a big deal.
Right.
And it's not. It's just something that, gets, villainized on the in the public realm because nobody likes to pay their taxes. Nobody likes to pay for drugs. Everyone wants a free lunch. And
Right.
it's easy to point to because everyone needs it, everyone wants it, nobody wants to pay for it. And that's it. And then they look out across the ocean with a bit of envy that they're paying very little for it. Well, how about that? Well, they also don't have any innovation. Like 90% of everything that's discovered and developed happened here.
Got it.
So,
Got it. All right, so Michael, it's masterful. I mean, you really covered a lot here, but let's drill down a little bit because of course, we don't have to restrict it to healthcare, but let's start with that. Healthcare is a very heterogeneous sector, and there are many subgroups: HMOs, biotech, blah blah blah, whatever. Okay, so I'm sure there are picks and pans in this sector. So to the extent you want to go deep on a name, and I'm going to pointedly ask you about a couple names, but do you want to just broad brush like what areas are interesting, what areas are not, or as longs or shorts, or what do you want to do? How do you want to get a little bit more granular on healthcare specifically?
Well, I could talk about each space quickly.
Okay,
All right, so you
go
can
for
get
it.
a rundown. You mentioned the HMO space. The HMO space has a problem. And you will find out what they are. And I can't talk about I, I can't talk about anything because about the legality of what's happened and criminal proceedings against UNH and how many others may be involved. There'll be more than them. And I believe that it is actually a case that started 5 years ago. And I think in the discovery process, it spawned into something really, really big and bad and criminal. And I see a mechanism of if this White House wants, UNH will get broken up into three separate businesses, and very likely not be able to participate with Medicare for a period of time. And there may be more than that. There may be more HMOs than just UNH. So HMO space has a problem. And everyone will see it when the actual charges come out. I'm curious because of the politics of it, how far they will go down the rabbit hole, because there will be a price for this. It is sort of a public service that they offer at a price, but I believe what they did was very bad, and there are more than them that did it. So I'm very curious, and my buddies who are really the gladiators of this space, most of them know what happened and what they've been doing and have known for quite some time or suspected. Uh,
Okay.
and so HMO space, I think, very likely has a very large problem.
That's a no-fly zone or a short. Okay, fine. Let's move on to another one.
Yeah. Med tech is just fine. That's like Intuitive Surgical, Stryker, hips, knees. They traded a premium to the rest of the space for a good reason. They have long duration assets with long product cycles, and that's there. And I think the Pink Fund. I got to take a look now how we're set up. The Pink Fund is like completely idiosyncratic right now. So Pink looks like nothing like the benchmark, pretty much. So it's very specialized in what I own and why.
Right. And by the way, let me just sort of for 1 second give you a chance to take a breath. I remember being in a space a few months ago. We had some guys in. We're talking about healthcare and XLV, and then and then you can speak to this point. When I opened up the XLV and I looked what was in it, it was like, dude, you realize it's like whatever. You look at the biggest holdings, it's like UNH, it's whatever. But it was like a couple really big names, and I'm like, this is like, do you know what's in your ETF? I mean, so I could totally see for a stock picker like you being able to capitalize on idiosyncratic opportunities. I mean, you would look like nothing like the index. I mean, that makes a lot of sense to me.
But sometimes I do.
Yeah, got it.
Sometimes there aren't. It really depends on my idea flow. And there's
Hmm.
two different types of idea flow. There is alpha idiosyncratic that's not meaningful in the benchmark, meaning, something that might be 50 basis points in the benchmark, but I think it's a tremendous idea and I'll own like 7% in the fund. So that has a crazy overweighting, right? Or people might call it crazy. Many of my peers wouldn't even put bets like that on because they're all benchmark huggers. When I take a look at it, like, their correlation to the benchmark is like 80-90%. So they really only have a handful of tiny bets on, and that's it. Whereas the other part to it, so that's an alpha idea where I'll be overweight. The other one is, for instance, UNH. In order to have a bet on and UNH versus that benchmark, UNH used to be 10% of the benchmark. And the bet would be, well, if I'm really bullish on UNH, I'd own 11%. And if I was really bearish on it, I might own 9. right? And so, how are you really going to outperform? You can't. You don't. And so frequently they don't change their weightings. They'll just be equal weight in these big names and not do any work on them. Uh, the Pink Fund was materially underweight UNH, like 90% underweight at some points, which was a huge bet in itself when this blew up. And it actually contributed a lot to the performance in the past 2 months.
Yeah, Mike, if I could make it easier for just to kind of contextualize it for the folks in the room, when you're running when you're running in the professional leagues like you are, I remember this from my days at Fidelity, risk is not defined as whether you're going to make or lose money. And I see Cantor's just to your right; he can speak to this. It's the professional risk, the career risk is benchmark risk. You're outperforming or underperforming. So if your sector's down 10% and you're only down 8, you did a great job. If the sector's up 20, you're only at 15, you did a crappy job. So it's but again, for individuals, the old line, Michael, I know you know this, it's like, oh, man cannot eat relative bread. It's like eat absolute bread. So running money professionally is oftentimes many different depending on your benchmark than it is running money personally for absolute returns. So anyway, back to you, Michael. Sorry, I just had to put that plug in there to give people better context.
Oh yeah, no, and that's really how the guys that are running uh, mutual funds and actively manage ETFs, that's how we look at it versus our benchmark. And my goal and the goal of Pink is to outperform the benchmark every year. And that's really the goal. And I think that if you look at Pink's performance since inception, which is about 3.5 years ago, we started in October of 21. And I think that holders of Pink versus everyone else every other fund out there would be very pleased with the performance. And that's really what I can sell, and that's the alpha that I will add. And that's my goal.
Okay.
That's
So, yeah. So, Michael, let's quickly go around the rest of the
Sure.
groups because I want to get people to ask questions. I'm probably about individual names. So, let's try to get to questions. But so we need not go through every group exhaustively, but any other ones you want to highlight as picture pans, and I'd like to get to questions in individual names. So,
Well, the big other group, there's the big other group that matters is the drug space. And the drug space is probably the worst performing space for 3 years in a row. This year, largely because of the politics around it and the threat to cutting the price of drugs, and that's it. So that'll give you in a nutshell. In addition, though, there's about 40% of the pharma companies model out disastrously over the next 5 years.
Okay.
So and I don't, and I'm underweight. I'll give you examples of the names that I'm materially underweight if at no weighting. Uh, Pink has, as of right now, no position in Merck, Amgen, Pfizer, Bristol Myers.
That's very helpful. And Michael, so anyone who has a question for Michael, please raise your hand while we're waiting for questions to fill in. And Brian, I know you're out there somewhere, and I see Cantro and Rusty's always got questions. So, Michael, I know people are going to ask because I got a lot of messages from people. Do you want to speak briefly to the electric car company that shall not be named because it's featured prominently in your tweets, as well as to PCT? Because I know people have questions about both those names. So maybe that's a good place to start.
Sure.
Go ahead.
I can talk about that, but I want you to be aware, and for everyone who's in the audience, because it's mostly retail investors. This instance of having retail investors being this active in stock markets is unheard of. And you could say, oh, it's it's the millennials and Gen Z, and they're much more involved and much more connected and knowledgeable, and that's true too. That is true. But what I would submit that is much, much, much different 20 years ago versus now is that the public has been receiving an unbelievable amount of money from the government every year in one way or another, where your benefits are more than the taxes that you're paying. And I know it doesn't feel that way. I know it doesn't seem that way, but the numbers don't lie. Those are the numbers. And that's been happening every year for about 12 years. And of course, you remember the time in 21 where everyone just got free checks from the government, and companies got enormous checks from the government, and a lot of that money allowed millions of new retail accounts to open up. All of them options accounts, by the way. And so we have a much more participatory retail environment than ever by a mile.
Excellent.
So we see, as a professional, and I watch this, I see an incredible number of things happening that don't make any sense, but it does if you're in the herd of retail. And in healthcare, you could point to HIMSS or HIMS. In quantum computing, you could point to most of them, which don't and never will have a product, or a Tesla, or a Palantir. Palantir's trading at over 100 times forward revenue, for instance.
Wow.
Yeah, so the implied discount that's associated with these names are insane. Just like tulip craze insane,
Yeah.
and it's everywhere. And you have to ask yourself, is it like that because it's such a great idea, or is it like that because there's about 30 million new retail investors that are in options accounts, plowing forward with the names that they know?
Makes sense. But
And that's what's new, and that's what's different. And I think it's valuable for retail investors to understand that you are in with a very, very new herd that has never seen an economic drawdown ever.
right, and with that, Michael, everyone should also know. I know you've said it. I'll say it. This is not financial advice. This is Michael spending his time trying to help all of us. His best judgment. He's a professional investor. He could change his opinion tomorrow. Okay, I remember my colleague Jeff Vinnick got in trouble many years ago at Fidelity because he said one thing, and he was at that position at that point in time. He believed what he was saying. It was about Micron or something like that. This is back in the '90s, and then sometime thereafter he changed his mind, and then when the quarterly filings came out, it turns out he'd sold it, and then people went after him with the pitchfork. So Michael's a pro. He could change his mind 3 times before the end of this week. So
If not, I already changed my mind.
exactly. It's like Stan Druckenmiller. It's the same thing. It's like they say, don't
Yeah.
try to do this.
Change the facts, and I'll change my book.
Exactly. All right. So Michael, before Brian, your buddy, asks a question, could you weigh in on PCT a little bit, because I got multiple questions from people that want to know about
Yeah.
PCT.
Well, as you know, I was there from the start, with PCT, and I made a terrible mistake on PCT when I first discovered it, and this was before it de-SPACed 4 years ago. I went to the plant. I looked at this, and it's
Oh
a
my
chemistry
God, you
plant.
did fundamental research. Shame on you. Sorry, go ahead.
Well,
Sorry,
remember,
Ted.
I'm a scientist.
Yeah, I
Okay,
know. I
I'm
know.
a
Go ahead. Go
scientist,
ahead.
and
Sorry to interrupt you, but I just had to highlight that. Go ahead.
and
Go
in
ahead.
my world, biotech, that is, new science doesn't go undiscovered, meaning that if a company has something that's whiz bang and works, everyone figures it out within about 3 months, period. Because we have hundreds of PhDs scouring the world looking for just that. And when I found PCT 4 years ago, and I went through the chemistry and I went to the plant, I was in awe. I was like, oh my God, this is so simple. It is the dumbest chemistry I've ever seen. It's so elegant. It isn't even chemistry. They're literally taking butane to a supercritical state, meaning, and that means under pressure and heat, where the butane acts like a solid, a liquid, and a gas all at the same time. And what it can do is clean all the gunk out of polypropylene, the dirty polypropylene. And so the polypropylene goes into solution, meaning it melts in the butane. The butane basically runs through and takes out all the garbage. And at the end of the line, after a filtration process, you can precipitate out little snowflakes of pure polypropylene. And it was so simple and so elegant and so quick. I thought that those hundreds of PhDs are going to figure this out in a heartbeat. I just thought, oh my God, I'm the first one. I can't believe it. And that's where I was wrong. I was wrong because those PhDs that are in biotechnology don't look at chemistry ever. In fact, there hasn't been a new chemical whiz bang event since nylon. Oh, nylon was the early 60s, maybe even late 50s. So there are no PhDs scouring for anything new in chemistry. They don't exist. I was the only one.
Jeez.
And
Okay.
that's what I got wrong. I thought everyone would see it and it would just be like, oh, yep, this is going to be $100 billion company. They nailed it. It's going
Right.
to take a little time to work out their first plant, but holy shit.
Right.
And that's what I got wrong, is that there is nobody looking. And still there's nobody looking. But now we're at the point where they have a plant that works very well, and their next generation of plant is actually going to generate twice as much per line. It's a line like a pipe. You stick the garbage in the front, clean stuff comes out the back. It's a big long pipe. And they're going to double the size of the pipe for the next lines. And so they're going to get at least 200 million pounds per line coming out. And the demand for their product is, look at it like this. If they get right now polyethylene, that's your Coca-Cola bottle. Polyethylene is over 15% of the market is recycled polyethylene. If PCT did 15% of the polypropylene market, hold on, I got to write this down. 230, 30. On the extreme low end, that would be $40 billion of revenue at the lowest end.
Wow.
To them, because they're the only ones in the world
Sure.
who can do this.
So Michael, just min-max probable because nothing's precise, but sort of unit economics, like for one of these plants, what do you reckon the unit economics are? Like, when you put up one of these plants, it costs X and it's going to generate Y amount of cash flow. Like,
Yeah, no, I can go through.
yeah, just give us one
So
of those. Yeah.
so think of the Ironton plant that runs right now
Mm-hmm.
is the pilot plant. That's the showcase to show the world that we can do this. And it is the least efficient plant. It's had many, many, many changes to it because it was overbuilt when they first did it. There were many steps that they turned out they didn't actually need to do,
Mm-hmm.
and honestly, that they're still doing now. And so the next plant is probably, like, for instance, if this plant is probably going to run around a 50% EBITDA margin business, about
Mm-hmm.
50% yield. Um, the next lines are going to be much more like 60, and in Europe, well into the 60s because there's specific pricing power in Europe that's much more favorable, and that's on the low end. But that's okay. You can just figure 50 to 65% EBITDA margins.
Right.
The plants are going to be cheaper to put up moving forward because they had to reinvent the wheel like 7 times when they did this plant.
Mm-hmm.
So the payback per line is probably about 3 years and maybe less.
Right.
So and when they're depreciating this, they're saying, oh, it's a 30-year depreciation. They don't have a reason why this wouldn't last 70 years. Okay. So the payback is ludicrously short on the cap versus the capex on a plant. And I'll reference waste management because waste management is sort of a comp company to PCT. Waste management spends an inordinate amount on garbage trucks and capex constantly. Constant capex in the waste management. Whereas PCT, all of their capex is just building the plant. And then it's just a few percent, maybe 5, maybe 6% at the highest for maintenance on maintenance capex.
Got it.
So it's just tiny. The
Got it.
recurring capex after the build is just minuscule compared to the cash flow it generates.
Okay, so we'll get to root in one second. I just want one last question on this idea. if you had to argue against yourself, what's the bear case? Like, what? I mean, people have been short this stock. Like, what are the bears saying? Not that you believe it, but what's the
Yeah, no,
bear?
I can tell you the
What's
bear
the bear
case
case?
is they can't produce it. They never had to produce it. When they actually have to produce it, they won't be able to produce it. So it'll be inconsistent production. And even on top of that, what is the real demand like? You know, where are all these deals, right? And that's all.
Got
And
it.
I have some insight as to how and why this is, why it appears this way. Not on the production part. I'm quite confident on the production part, but on the commercial part, it's really about um, they want this product because they get to market that it's recycled.
Right.
And the input cost for most of the companies in the polypropylene arena is tiny. Like if you wanted to do all recycled polypropylene for automobiles, you're talking about a cost that might be what, $100 more per car.
Right.
So it's just really tiny.
Got it.
So they don't really worry about that. What they're worried about is, well, okay, we're GM. We want you to do all of our bumpers, and we need 200 million pounds. And PCT is like, we can't do that yet. We don't have capacity to do that. How about 20 million? And then with 20 million, well, now they need two different lines, right? Where they have one that's making the bumpers out of this polypropylene and the other one that's making the bumpers out of stuff that they buy off the shelf.
Got
And
it.
so there's a logistics issue for this small batch. And then you have to look at these guys who are running this, you know, at GM, at Procter and Gamble, at Unilever, and the marketing people want it, but the actual line guys that make this, they're really risk averse, right? They're looking forward to their pension. These guys are cogs in the machine.
Right.
And when's the last time they saw something new in plastics? Never. So they are not used to anything new ever in their life. They've never heard of anything new.
Yep. No, I
Like
get it. I get it. I get it. All
so
right.
so that's really the sort of thing where and they're running right now, they're running 30 some odd tests for clients to make sure that it works out. I think I'd be surprised if one of them didn't work out. I'd
Okay.
be surprised if there's one that doesn't work out. They can make everything now,
That's great.
from film to fiber to injection. They can. It's polypropylene. Okay,
Right.
they can
Okay.
make it. So it's not. But people don't believe that until they see it.
Got it.
So I think in the next, let's see, you'll see through the summer. You'll see through the summer into August. Um, the clients coming on with the orders. I would not be surprised if they not only have an order for, let's say, 5 million pounds as a starter, because they want to see, can you deliver it? We want to scale up. Here's a 5 million pound order, but we'd like to be able to take that to 10 million pounds because we know you have limited capacity. But what we'd like an option for 30 million pounds from your new facility when you build that. And that's what I think may happen,
Got it.
that they will be looking at taking an option on future capacity.
Sounds pretty exciting. All right, Michael, that's great. Give it a rest for a second. We've anyone who has a question or comment, please raise your hand. We're first going to go to Root Capital, and then we'll go to Rusty. Root
Yep.
Capital, the floor is yours.
Hey, George. Good to see two of my old friends on the same call. Mike, I was looking over your filing and noticed you have outsized bets on Danaher and ADMA, just given your idiosyncratic focus.
Yeah.
Curious what you're shooting for on those two.
Dana is, if you noticed, let me take a look. It's down about 13% year to date because the whole space got trounced. And actually, since let's say October of last year, it was at about 270, and now it's at about 199. So a big underperformer. Danaher is going to be one of the biggest beneficiaries of reshoring biologics to the U.S. and they are going to have their hands in every single build out. And by my count, and it's on an envelope, the count on reshoring into the U.S. looks like about $250 billion that I just look at. This is going to take 5 years, and it's going to be a massive tailwind to Danaher, and it's not in numbers at all. At all. None. Nothing. Zero. Nobody even know. In fact, me saying that, I think, is the first time I've ever heard anyone say it in a public forum. So that's Danaher, I think, and we own it size right now. And then Adama is a pure play on plasma, fractionated plasma. So just to give you a back story on why this is an important drug, there's only a few plasma players in the world, and this is the only one that has excess capacity. You get the plasma from collections. You collect it from people who get paid $50 to donate their plasma, and so it's a limited supply, and you fractionate out immunoglobulins that are anti-inflammatory, and you send it off to the hospitals. And the hospitals use this different fractionations for the most part crash cases of usually old people that have they don't even know what they have. They have an autoimmune disaster going on and they don't know how to stop it. And the fractionated blood products helps. And it's extremely expensive. It's very low supply. There's only a few players. And Adama is the only one that has an improvement in their fractionation process that immediately is going to, it just got approved, by the way. It's going to cause a 15% increase in yield at a very, very, very high margin. So you're going to be adding 15% to the top and more than that to the bottom line for Adama. At the same time, it's turning from a very little free cash flow, low free cash flow, it's trading at like 20 times. It's going to go to much higher free cash flow. And they are going to buy back the crap out of the stock.
Wow. Hey, Brian, do you have a follow up to that?
Just one follow up. If someone were to buy ADMA, would they have access to the same technology to widen their breadth across the whole product suite?
Product suite of what?
Like if a larger plasma player were to buy ADMA, would they be able to increase their yields the same way that ADMA is doing now?
They'd have to figure out how to do it, but it's very unlikely ADMA gets bought by another plasma player because of antitrust. So if somebody buys Adama, it would be like a Baxter that needs a growth story and doesn't have any plasma products already. So it wouldn't be where CSL buys Adama. There would be antitrust issues.
Got it.
Thanks for the time.
That's great. Thanks, Brian. All right, let's go to Rusty, please. And then Rusty, after you, we're going to have Tom Thornton. Rusty, please unmute yourself.
Hey, Michael, I really appreciate it. This has been very informative. My dad's a pharmacist. My mom's a nurse, so I hear, well, have heard in the past.
And by the way, we don't have to talk about healthcare.
Well, I know, and that's why I'm not going to, because
Okay.
that's why I went into finance. I hate healthcare.
Okay.
Growing up in it. But anyway, I was going to ask, you touched on, of course, the bond market. I mean, that almost leads to, you're talking about going on the short duration. I mean, that has to beg the idea that gold is going to go up, right? Do you?
I agree. I think I can never tell you what's going to happen in like the very near term, but I look. Imagine it's Occam's razor. Okay, so even when Trump knows that we're dealing with a banana republic situation, I mean the debt levels in the sovereign debt levels across the world they all look like banana republic. And you look at the stock market and what it's done, and you say, and then you look at the bond market and the issuance, and you're like, of course stocks have gone to the moon. The issuance and bonds have absolutely gone parabolic, just parabolic. So there's so much money that's been created. It's Banana Republic like. And they can't. The Occam's razor part is Trump looked at this and said, we got to really stop this crap. But the pain of stopping was so much worse than just not stopping. And so they just don't stop. And so when I think we run into a bond problem over the next year, and we may end up having recessionary conditions to it because all of a sudden it's going to cost 15% to finance a car. And well, what do they do then? Do they get some fiscal sanity? No, they're not going to do that. They're going to print money. That's what they're going to do.
And Michael, if I could just add in a question piling on what Rusty was saying, just seems to me that not only you was one cruising for bruising in the bond market, the bond problem, don't you think they're going to have a current, not problem, because they probably want the dollar to go down to make us more competitive, but don't you think the dollar sells off in that scenario too?
Oh God, the dollar gets absolutely torched like you can't believe. But what'll happen at the same time is that it is going to encourage everyone else to print their money too.
Yep. So it's the old line about, remember the commercials, got milk, like got gold. I mean, all this paper crap goes down.
Yes. So, and by the way, stocks will take off, but not in dollar terms. Like in dollar terms, it may not move as much, but
Right.
in gold terms, I think that
They're gonna crash.
and I really thought that with Scott Bessent there, because I know the guy, like he's saying things that don't make any sense, like immediately, and he knows that we know that he knows he's lying.
Yeah.
Right?
Yep.
Because he says things like, yeah, we really got to get the long end of the yield curve down. We have to get interest rates down. And how we're going to do it is onshore everything so we can get wages up in America. Right?
Yeah,
And
like
like
Michael.
he literally says that in
Yeah, Michael. Like, what is it about that you don't understand? Exactly.
and I'm like, I don't have enough crazy pills on me. That's what's going on. So, and the point is that he's saying this 2 months into the administration. Like, usually you wait to the very end before you start saying totally crazy crap. But no, right off the bat, he's like, and then I'm reminded of Hunker in Europe, and he said about the Greek crisis when they flubbed everything. This is several years ago when there was the European debt crisis, and he goes, well, when it's really important, you have to lie.
Exactly.
And so I guess it's really important.
Yep.
It's really important because he's already just saying shit that doesn't make any sense.
So, Michael, wait a second. You mean this is not like 3D chess? They're not just throwing shit against the wall and seeing and the car swerving from one side of the road to the next?
The only piece that may be 3D chess is that Scott has very, very, very much wanted to make Xi dead in China. Xi is the greatest threat to the world. And you've probably been watching my posts. I've been noticing for about 3 weeks that Xi is in deep shit in China, beyond deep shit. I think it's over, in fact. I think it's over. I think Xi is no longer in power. And I just went through the news today. Again, they don't even refer to him as President Xi or Premier Xi or Grand Supreme Leader Xi. They just call him Xi now. No title.
Yeah, why is it they want out with him in China? For those in the room, like, what is the issue the Chinese have with Xi?
Well, it comes down to money, okay? And it's not just that their economy is in beyond shambles. It's a complete train wreck because they spend 42% of their GDP as CapEx. 42% of their GDP is CapEx
Oy.
in an economy with massive excess capacity. So, yeah, that's a train wreck beyond recognition to begin with. But that's the easy one. The hard one is that Xi is a true Maoist. And you got to take him at face value what he really wants to do, and he wants to reassemble China, including Taiwan.
Mhm.
And if he goes and he got Hong Kong, right? Check, got it. And if we go and take action to take back Taiwan, which they've lost politically, by the way, they've lost all their political pull in Taiwan in the most recent elections. And I'm very pleased about it. So that leaves him with only military to take over Taiwan. If he does do that, you have 1,000 dynastically wealthy families in China. And just like the Russians, guess where a lot of their assets are? Outside of the country.
Mm-hmm.
And just like what happened to the Russian oligarchs, when the going got tough, we took over all their assets. Took them. That will happen to China too. And so you have 1,000 dynastically wealthy families all of a sudden don't want to be poor.
Mm-hmm.
So she is in trouble. And I think she is finished already.
Oy. Oy, oy.
I
All
think
right.
we'll hear about it officially in August.
Got it. All right. Take a break, Michael, a breath. Tom Thornton, my friend. Welcome.
Oh, Tommy.
Tommy, good. Tommy's everyone's favorite. Tommy, I know you were tight with Michael, so Tommy, please unmute yourself. The floor is yours.
Well,
Gives me all hard questions.
okay, I've got a few things. The first thing I'm going to give kudos to George. I was intently watching all the presentations on your conference. I think it went great. Really, really fantastic lineup and informative. And I hope you will do this again very soon. I think it was well worth it. You should raise your prices, by the way. So anyway, so there's that. The next is I want to talk about Max Taylor right now. This is the son of Mike,
Oh
and
no! Here
no,
we
and I
go with
just
the car. Here we
hold
go.
on,
Here we go with the car nerds. All
hold on.
right, we
I'm
have to
not gonna
close
go.
this space.
I'm just gonna say I've known Mike a bunch of years. I've been following Max's career in go karts, and now he's in the junior, right below the Indy cars. And in his first race, in a like the worst track on earth in Detroit, a street track that was not made for racing, he qualified third. He, got caught up in a bang up in the first lap, but I will say this: keep an eye on him. He's fantastic, nice kid, 17 years old, and everybody's taking notice. So, congrats, Mike, to that, and good luck with your fun. You better get that thing going because it's going to cost a lot to keep him in a
I'll get.
seat.
I'll give you something to wet your whistle and tempt you. There will be an announcement later in the year.
Oh, yeah, exactly.
We will be choosing who to drive with for our first full year in Indy Next, and I think that there will be a number of wows.
Yeah, well, I'm looking forward to hearing that it's Andretti. That's who I'm guessing, but I'm not going to say
I
who it is. Anyway, go on. So just to,
I think that there will be a lot of people wow, and I'm happy. He's like he just got back last night from Ohio. Tomorrow morning he's leaving. He's going to Wisconsin. That's his
yeah,
life. He doesn't have time for girls. He doesn't have time. All he does is go to the gym, get on the sim, eat, and oh my God, the load, because he eats about 4 to 5,000 calories a day.
and
The,
he's the
the
skinniest kid I've ever seen.
no, he's put it on.
Okay.
He's put it on. He's about 154 now.
Okay.
He's
S- uh,
he's packing
all
it
right.
on. Believe it or
You
not.
and I just call me and we'll do this conversation. But I just George said don't talk about PCT because we already did. It looks fucking great, but
Oh,
so I won't talk about it.
No, no,
Um,
no, Tom, no, Tommy. Just because
I
Michael
know,
gave
well,
a
I
I
know.
will
real
I will comment on this. Is that the shorts haven't covered,
Yep.
and we've seen this though, and there's a reason why, because it's a lot of like programmatic shorts that are short this, and they're short all the SPACs. All right, and I'll give you an example, like MP. MP is a minerals mining company, U.S. specific. It's up 77% this year. A lot of tailwinds for them. 20% of the float is short. It's a SPAC. And the reason why these SPACs still have so much short interest attached to them is because all the other SPACs went to zero.
Right.
And those machines have fewer items to short. And that's what's happened to me. I mean, look at like Origin. I'm talking about things that I'm bearish against PCT. Origin's at $1. A number of these things are at $1. Danamer is gone. And there's just so many others that are gone. Lev is gone. 20. What was I think it was 23andMe gone. All these things that I was involved in gone. So I'm like, what do I short now? Well, PCT. It's the one that's left and still liquid. And I think that's really the brunt of who is short this. It's machines.
Yeah. Well,
And
the machines are going to wake up one day and go, "Oh my God, we've got to get out of this thing." So
well,
I,
I'll tell you the day, because how it's going to work. See, all these machines use pretty much the same inputs, and they'll all cover on the same day when the inputs change. It'll be the same day,
yep.
all happen in one day. And it'll be, because there won't be just, there'll be 40 million shares to buy organically and 40 million shares to cover.
Yeah,
That, that's what
that'll be a rough day for those shorts.
oh my
Anyway, and
God,
I
it'll
promised
take
George I
3 months
wouldn't go
to do
through it again, but I just want to a few people have asked.
Tom,
Yes.
shh. Don't tell anybody. Pro tip. Don't let anybody else. This is a secret between you and me. If you want to ask Michael to opine on the electric car company that shall not be named, you're allowed to do that, because we didn't talk about that one.
What company would that be, George?
I don't know. I've never. You
They
ever heard of
don't
this
make
thing?
cars they don't make cars anymore.
No, it's a robot. So, Tommy, have at it, because I know you're you got more
well,
Elon envy
well,
than I do. So go for it, dude.
no, I actually I have a couple comments on that, but the one thing I will say, just from a market standpoint, we had a lot of downside into the beginning of April, as we know, and we had a lot of DeMark buy signals. Then I'm getting just across the board, all the major indices from the S&P, the S&P 100, NDX, NASDAQ Composite, the NYSE Composite, the Dow, all have DeMark sell signals developing and qualified right now. So we are at a place right now that I would say we could see a reversal of some sorts in the next, I don't know, 5 to 10 days from here. Could be tomorrow.
Mm,
But I think that's ahead. That's what I'm seeing. Sentiment is went from 10% bulls to now 75% bulls, which is not extreme, but it's elevated. And I think that right now, and I've been positioning myself, I've been neutral. Now I'm positioning myself net short again. So I'm expecting something, and we'll see. I don't know if it's going to be the CPI or who knows what'll, cause the selling. Maybe a tweet. Usually it is these days. But I will say, regarding Tesla, the interesting thing that is happening is that the last time this thing went bonkers on the upside, back in 21 or 20, I don't know, they were growing. They had a fresh lineup of cars. The Model Y was just coming out. It was just, gathering steam. They were launching a Berlin factory. China was ramping up, and it's all different now because the growth has disappeared, and they're most likely going to report 15 to 20% downside in deliveries this year. And earnings estimates right now, and the sell side is always way too high, is currently at 194 per share. That makes it 185 times earnings, which for a tech company or any type of company, especially a car company, that's absurd. Now, here's the thing. I think that with robo taxis and the robots, which the head of the robot division quit Friday, conveniently with 5 minutes to go. I think this one has some real trouble here. And I think shorts probably piled in on the down day, and they're covering and getting a little whipped around. But I think this one's got real potential for some disaster coming up with deliveries and earnings. And I would not be surprised in a coming quarter that they show a negative operating loss. And if they didn't have the emissions credits, they would have had an operating loss. And so I think that there's a lot of people that are going to say, oh, the robotaxi, the 10 of them that are in Austin with pillows on the side of the road and hay bales in case they go out of control. Um, that's not enough to keep this thing going. So I think that that's the issue right now, with Tesla. I think that we have an opportunity with it's $1 trillion company. And if you value the car company at 100 billion, and that's generous because that's more than General Motors and Ford combined, and they sell a few more cars than Tesla does with the same margin, by the way. Um, I, I think that there's $900 billion worth of fantasy and hopes that don't report any revenue, don't exist, or don't work. So I think that right now, Tesla is a really difficult place, and also, losing the best buddy friendship with Trump is probably not necessarily great timing for them either. So that's
It's
all I got to
horrific.
say.
I agree on all those points. Very simply put, Tesla has negative pricing power, and it's a auto business with margins that suck, and they have negative volumes and negative pricing. And the market where they make the most money is China, and prices are down about 25% there on competition. And it's man, and remember that remember that Musk is Xi's guy in in China, and I think she is out.
Oh,
So
one thing I should also mention, the last time this thing was running up, they didn't have any competition as well. And now they have really formidable competition, especially in China. And all the factories um, are running at capacity that on average is around 40% right now. And that's really, really low for any car company to be running at that type of capacity. China's still high, but China sold cars are negative margin car because they've just had to lower prices so much. Tesla actually makes more money on cars they export from China to other countries, especially Europe and Australia, and a few other places, even Canada. They were exporting cars from China to Canada, which is, it sounds crazy, but they made more in margin by doing that. So I think that it's a tough time right now because every region from the US, Europe, and now China are seeing declines in deliveries, and you have a stale lineup. You don't have anything new coming out other than a deplatformed Model Y that will be cheaper, and that's never good. And the Cybertruck, I think, will probably get discontinued this year because the 2 million reservations that Elon promised will most likely be around 50,000 cars sold this year. And
Tommy, we lost you there. Tommy.
well, I think we got his point. That's for
Yeah,
sure.
yeah, yeah. We got so
jumped
Mike.
because,
Tommy,
oh,
rewind.
sorry.
Tommy,
Rewind
rewind.
15 seconds.
Rewind 10 seconds. We lost you for a minute, for a second there.
Where'd you lose me from?
About about 10 seconds ago.
Um, yeah, I think that you now have the US, Europe, and China with lower delivery numbers, and that I think is going to be difficult. And if you have fewer exports going to Europe for the Model 3, which is their highest margin car, believe it or not, going to Europe, I think that's going to be very difficult. And if Trump takes away gets rid of the subsidies, and then ultimately the emissions credits are going to go away, because there's not going to be a mandate that everybody has to have an EV. I think that's going to be a really difficult time, and the market just doesn't get it right now. And then again, maybe I don't get it.
No, you
Tommy,
But
don't get it.
Tommy, you get it. Don't let your head explode too
You,
much.
all
Tommy,
right.
Tommy, you don't get it. Okay, because look at HIMS. You know, uh, I get a lot from healthcare, and HIMS as ads constantly on the all the platforms, and so everyone sees it. Number of people use it, and they think that this is the next big thing. And I had to probe. By the way, the credit card transactions look fucking abysmal, just a bit bad. Like HIMS is not going to make numbers, but people don't even know that. All that they know is this thesis that for some weird AI component that doesn't make any sense, but they always say AI, and that people don't want to go to doctors anymore. They like doing a remote doctor, that they're willing to pay for this and pay a premium for a compounded drug. All of this costs more than going to the doctor, and there's other barrier, like you can go to a competitor. There's many competitors to HIMS, and you can get very similar things from them at the same price or less. But they think that this is going to be the next big thing, and it is going to take over healthcare, and you're going to get all of your drugs delivered by HIMS because you can get it all done over the phone and you don't have to see a doctor.
Yeah,
By the
I
way,
agree with you on that
there was
one.
another company that had the exact same idea, and Kathy Woods owned a crap ton of that. It was called Teladoc. You remember
Yep.
that? That was
Oh yeah, the doctor do it from home. Yep,
yeah, it
yep,
went
yep.
down 95%. It's a
Yep.
great business.
I
The
remember.
problem is the barrier.
I just interrupt. I want to go to Howard in 1 second, but before we get to Howard, I'm reminded of Shrub, who's one of our favorite follows on X, and he's got a great Shrub stack, as he calls it. You know, once you realize it's a Ponzi, it all makes sense. Okay, like you try to, Tommy, you try to analyze this. I said it deliberately that way.
All right.
Analyze
Yeah, I
this.
know.
Okay, forget it. It's not gonna. You can't get from here to there. All right. So anyway,
I know. Hey,
right.
listen, guys, I got to jump. Mike, fantastic. Nice chatting with you, George, and congrats.
Always fantastic.
Talk to you
Thanks
guys
for
soon.
dropping in, Tommy. Yeah, be good.
All right.
Okay.
See
All
ya.
right. So not Gnostic, hang on for 1 second. Where did Howard go? He was here and did he disappear?
He just
I think
dropped.
Howard
It
he
could be
just
a
dropped. All
glitch,
right.
though.
It could be all right. So we will go to Gnostic, and if Howard comes back, we'll get him. Gnostic, good to see you. Please unmute yourself.
Yeah, I think Harold's got a connection problem right now. Um, Michael, a couple of questions. I've been following China by electrical generation and its coal consumption for its electrical plants for some time,
Mm.
and out of Mongolia. And Mongolian coal is way down now. Even the dividends coming out of it may be stable, but the price has been bid up in anticipation of increased demand for electricity, but I'm not seeing it in the price of coal. I think the structural issues within China are really bad. And you're the first presentation I've heard in quite a while that's gone into some detail in China. How bad do you think it is internally? I'm hearing internal stories of wealthy days selling jewelry collections, like jewels, not jewelry, but the stones themselves that they collect as safety valves, like gold, selling them, and that they're through the Chinese families are through the premium jewel collections, and they're now going into the secondary jewel collections, and that watches are
Mhm.
also coming out now. So all of that would, to me, indicate that we've got that China has a real problem, particularly in high end. Uh, Wealthy people and mid-level wealthy people are really having a hard time now and getting worse. But how do you feel that it's that bad in there? Um,
Well, you have to look at it like is that they did over a century's 2 centuries worth of build out in a span of 20 years. And that build out of long duration assets, much like our housing event that happened in '04 to '07, or you could even go earlier than that, that was a fraction, tiny fraction of the size of the build out that happened in China. And the multiplier that's attached to building those long duration assets, tunnels, homes, bridges, trains, all of that, there's massive multiplier, and they benefited from all of that, and it looks really great until you finish. And they've finished because there's at least 100 million vacant unused, never to be used housing units in China. There are trains, train tracks, roads, tunnels, bridges that are just spanning the entire country. Now, and I mean spanning the country city to city. Once you go outside the city, it's still a wasteland. It's not developed at all. And this is really what happens with top-down central planning, right? They always get it wrong because there aren't. It's all about whatever the government decides to do. They will fund it, and then it gets done. And it doesn't. It's almost always not the right thing you should do. But while they're building out, it feels awful good. And what I always described China was with Ed Hyman and I had an argument about it over the past 20 years. That I was like, this is going to end in a gigantic inflation debt bomb because of misallocation of capital. And we're there. We're there where what they have built by and large is not generating a hurdle rate return. It's a negative return. And when you look at the capex that they've done, which is 42% of their economy, they no longer have room to do that capex anymore. So what they have to do is now maintain that capex that they did, which was by all accounts incredibly shoddy for the most part. So you just have millions of people walking around with a pail of cement and a trowel to fix all the cement damage that's in their iron or their cement jungle that is China. And there's no multiplier attached with repairing shit that's falling apart. There's no multiplier. So I think that China is going to be known as the country formerly known as China. That's what I think is going to happen. And it's going to happen economically, and it's already happening demographically.
That's
You're
fabulous.
literally watching, and Japan too, by the way, just in a different way. But China, because they've kept an isolated country with capital that was contained, can't get the money out. They hoard all the dollars and hard currencies, and then give their people this fake currency called the RMB, and they force them to use that, and you can never exchange it to get anything else. They've basically kept the entire populace captive, and it will work to a point, but I mean, I don't even want to say the stuff that could happen next or might happen next if you go through history. I don't want to say famine, but that frequently is what happens when countries get to this spot. So we're going to have to find out who the new dude is, New Shi, that comes in. I'm just going to name him. His name's New Shi. New Shi. New Shi. New Shi
All right.
Biden.
All right, so hold on. Nasik, just hold it for a second. I want to get Howard in here, and then Nasik, you can follow Howard. Howard, good to see you. Please unmute yourself, Howard. You got a question for Michael?
Hey, George. First, thanks. I want to just thank you for the great conference. I've gotten about halfway through it, and I just want to echo Tommy. I think each session was worth the price of admission. So if folks haven't gotten a chance, I think you made everything available on demand. So
Yep, it's all there.
yeah,
Go for it. Yeah,
yeah.
thank you for the by the way. Thank you for the kind words. Neither Tommy or Howard. I have no idea what they're going to say. They're not shilling for me. They watched it.
I
So there
was
you
going
go.
to lead with that, but I thought maybe folks would know.
No, it's go ahead. All
definitely,
right.
definitely not. Mike, both of you, Mike, great rundown, phenomenal conversation. And I really have nothing to add other than if you've got any interest in racing, get a minute to watch Max Taylor. Even qualifying practice laps, any coverage of Max, it's quite a treat. Mike, you've raised an incredible kid, and it looks like he's got a great future ahead of him. Looking forward to the announcements. And I'm going to yield the floor to Gnostic and Mike to get back to the China conversation or whatever's next. Thanks, George.
You're very welcome, Howard. Gnostic, thank you, Howard. Thank you for your support. Gnostic, back to you. Follow up.
Well, thank you, Howard. So, Michael, your prediction on China and relative to what's going on is matching an awful lot of the work that I've done looking at China. And two questions come out of that, and they're kind of seem the opposite of each other, so I apologize for this. But number one, where are we wrong? Where could we possibly be wrong about this happening in China and fail? And number two, if we're not wrong, how would this affect the world standing? I mean, what would you say going forward would be the effects on the United States uh, and its capital situation, the markets, bonds, etc.?
I mean, the U.S. independent of all this has a gigantic freaking problem. The sincere hope is that we can get a much more open, markets friendly individual in on China. Now, that is a huge, huge, huge risk for the CCP. Okay. The CCP cannot have journalism or law. That's the problem, because these people are guilty of so many crimes. It's astonishing. And they will all be killed if they actually had a free press and law. So chances are we're going to get somebody who's new she. That's it. It's going to be new she, and they'll be a little bit different, but everyone will hope that they'll want to play ball and have more open markets. But the reality is that they can't. They can't let their currency free float. They can't, because the currency will implode immediately. They can't. There's so many things they can't do. And if you're not going to have law, you can't really have contract law. And if you can't have contract law, you can't really do business in China, as we've just learned, as Tesla has just learned. And that Tesla is being beat by several other automakers that have all stolen his technology and now are mastering it. And you cannot operate in China with any innovative technology, because they will steal it from you and use it against you. And that's it. And there's nothing you can do. And so I think that the transition is just going to be Nushi, and it'll end up being pretty damn similar. Just they won't invade Taiwan.
Well, like the invade Taiwan, is what you were saying about Taiwan is interesting. The input I have out of Taiwan is that a lot of the regular people in Taiwan would like to become part of China again. The government and the multi-generational rich people would rather not that happen. And that presents a bit of a conflict within Taiwan itself. But within China itself, like I've had indications of exactly what you're talking about. Hotel manager in Guangzhou basically says, you know, bar used to be exciting. Everybody was there. Girls were there. Business was there. White people, Chinese talking away. Now, virtually every time there was a white person talking to a Chinese person, somebody turned them over to the government, and the bar was just empty. And he said, we had a great time before, hotel full, bar great. And this was about 3.5, 4 years ago now. So this has been going on within China for some time period, where it's just been
Yes,
winding
it's been
itself.
4 years.
Yeah.
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 And this is what happens when you start losing control of power. You clamp down, clamp down, clamp down. And
Yeah.
so I'm not terribly optimistic that new Xi is actually going to be much different than old Xi.
That only, to me, that only says that it accelerates. So by my guess, China's got about $2 trillion too much money floating around in everywhere right now. And I might be out at least 100% or so on either side of it. That has to basically disappear before it stabilizes. If they do what you were saying and print more money in order to sit down and do it, that just exacerbates the problem even worse going down. And we're looking at as you were saying, a catastrophic set of events in China that may affect how
Well, they are
everything else
printing money.
does.
They are printing money because all bad loans go away. That's money printing. It's just in a different way. You have to recall that every business, every bank is actually the government. So
Well,
it's
thank you.
just a different way to look at it. So when they have bad debt, that is printing money, because all the bad debt simply gets recycled or forgotten or delayed, to infinity. At issue for China to recover in any way, they need buying power, and they cannot get buying power from the RMB. The only way they have buying power is exports, so that they can get hard currency and then buy things that they need to grow their economy. They import an awful lot of the raw materials. So the hard currency is their key. They can't use the RMB.
Right.
So
Well,
they're kind of,
would clearing through gold in bricks, like gold being the clearing mechanism in bricks, to sit down and clear in order to get that currency, would that work for them then?
if they ever went and said we're going to a gold-backed currency,
I don't mean a gold-backed currency. I mean clearing the same thing as SWIFT clearing in U.S. dollars. Instead of clearing in U.S. dollars, they clear to gold and from gold in the exchange rate, bringing them in
I'm
currency.
certain the U.S. would make sure that would absolutely not happen.
Right.
The U.S. can absolutely not afford to have another currency versus ours when we have this much effing debt. We need buyers of that debt or we're dead.
Yep. All right. So, Nasik, thanks so much for the questions. Michael, you've been incredibly generous with your time. I have one more question for you. I can ask plenty more, but it's going an hour and a half already. I usually promise folks like going to the dentist. It's good, but this is more enjoyable than the dentist. But anyway, you've gone beyond the call of duty. You mentioned in passing, you triggered me. You talked about the high end in China, and I'd like to ask you here domestically. And I don't want to get caught up in anecdotes and hot takes. You and I both know that you can find, yeah, you can. It's like shopping for the doctor's opinion you want. You can always find some anecdotal support that what you'll say. But increasingly around the edges of late, there's been signs of the high end cracking in the U.S. I mean, whether it's that failed Sotheby's thing, auction a couple weeks ago, or I look at what's going on. I live in Westchester. I see what's happening. I know all real estate's regional, but I see what's happening, starting to happen here. How in Westchester, I hear stories about hotel cancellations. Very what's going on in Athens and parts of Europe. So there are signs that things are fraying around the edges, and so like this K-shaped economy, where the was it the top 10% account for some ridiculous percentage of the consumption, that there are some thin read indicators suggest that maybe that the worm's starting to turn. Do you have any perspective on that?
I agree. It has everything to do with short-term debt getting refied, just getting refied at a higher rate. That's it. That's really what it is. And you see it in the housing market. Like
Yeah,
there is very little over $5 million that is moving anywhere. Period.
yeah, yeah. So let me just
Not
pile on. Yeah, so I live next door to the wealthiest zip code in the state of New York, and I can tell you that it's exactly what you say. If anything comes on below 2 million, that's a bargain, because everyone wants to get into the scars. Oops, I said it. The this wealthy town school system, but anything up in the stratosphere like that, imagine that, Michael. Under 2 million is a bargain. All right, so
yeah.
it's starting to happen, and
No, and every year it gets worse though because we have so much short-term debt that has to get refied.
yep,
You see it in commercial real estate, big
right.
time, big time, big time,
And
big.
yeah, let me just plug for Melody Wright. She was one of the featured speakers in our conference on Friday and Thursday. She lit up the room. And she was Debbie Downer, actually. It's like, it was one thing after another. Wait, and there's one, and another thing, and another thing, and another thing. I was like, can I slip my wrists now? But I mean, again, it's location, location, location. But she was going through whether it's LA with the fires, or the excess inventory in Austin, or what's going on in Florida with the HOA and the insurance. I mean, it's like, Melody, please make it stop. I was like, hey, but no, I think you're looking at a generalized decline in housing. It'll vary by zip code, how much it's in nominal terms, but certainly in real terms, I think housing prices are going to crash. And so, yeah,
Well,
anyway.
we've never seen anything like this with the buyers versus sellers in housing.
Yeah, 100%.
The units. So what's happening now? You're getting to the point where they have to sell.
Yep.
And Florida is a great example of have to sell because
Yep.
a lot of the costs to be in Florida went up materially. And you have a lot of people in Florida that are very, very house rich and
Hmm.
cash flow poor because over the past 15 years, the value of their home went from 1.5 million to 7.
Right. Let's not even get into the hidden supply in the form of Airbnb or the
Yeah,
Blackstones,
we don't have to
welcoming
go into,
sellers.
but
And
I
we need not go there. Exactly. Exactly.
I'm looking right. We're looking to relocate to Florida. By the way, I I have a business down there that's going very well, but I started it actually to capture this exact event, a housing issue in Florida, and I started this up about 2 years ago, and it's gone very well. So I'm going to relocate to Florida to be closer to this, and as I looked at the houses where I'm going to relocate to, and it's the western side of Florida. Um, I looked at a whole bunch of stuff, and the prices. And by the way, almost nothing has moved this year. Meaning, what I saw 6 months ago is still there. All of it is still
Oh
there,
God.
and nothing has moved. And this is everything over 5 million. But these are things that traded 4 years ago for 8 to 10, and
Yep.
they're willing to take 5.5. And these are people that are still sitting on. I'll give you a great example and how I identified some of these houses. Waterfront, beautiful, you know, great house, great bones, good build. But then I'll go through it and I'm like, okay, so this is like a 7 million, $8 million house. All right. Or that's what it was. But I'll look through very specifically. And there's one that I really liked. And I won't say what it is, but I will tell you what got me the information that they will take a lot less because they're extremely cash poor and house rich, is that all the fixtures were from IKEA.
Boy.
Yeah.
And
The
Michael,
light fixtures were all from
yeah,
IKEA, and
it, yeah.
that is the key. So
So,
now you
so before we go, I'll just lay in one thing. I don't want to encourage any competition if you're bidding on this house. I doubt it's going to happen. But
there's a lot of them like that, by the way.
I know. But just by chance, I was down on the West Coast myself of Florida a couple months ago, and I was coming up from Naples. I got to Venice, and then I went up Casey Key. And that place got wiped out, and like a lot of it hasn't been rebuilt and whatever, and there's bid wanted like on freaking everything. So the way in Naples, which was like a hotbed for so long,
Hmm.
you go in the local diner, it's like bid wanted, and like the wait's just telling me how not don't buy anything now, everything's for sale, blah blah blah. And you know what, Michael, the party just got started. Florida, we're like maybe we're in the bottom of the first inning. It's like maybe the teams aren't even done warming up, it's just getting started. And here's the worst point I want to make to you, and I'll push back. I want to throw this to you. What gets me about this, and you spoke about at the top of it, and we'll finish on this. At the beginning, you spoke about how this has been not normal for the market. Everyone wants their bull market, blah, blah, blah. What gets me about this housing decline that we're going to be looking at, it's not like, okay, it's going to go down and then come back up. No, I think this is going to be a long, drawn out phenomenon. Be better, just crash the freaking thing and be done with it. We can go back to a regularly scheduled program and buying. I think that's going to happen. I think this is going to be epic in terms of whether in terms of price or in terms of time. I just don't see how we're going to come out the other side of this anytime soon. Thoughts?
Only way we come out the other side soon, or the other side, with lower interest rates is for the U.S. Treasury to stop and the federal government to stop spending the way they are. Otherwise, the U.S. demand for credit, our sovereign credit,
Mm-hmm.
what you are seeing is them crowding out private industry and the housing market. That's what's happening. The reason why yields are where they're at is because of our debt problem.
Yep.
That's why they're there. And
Yep.
that's the only way. Or we print. And printing will suppress yields. It will suppress yields. The more we print, but as you know, that is, believe it or not, a short-term fix.
Mm-hmm.
Japan was able to turn it into an almost long-term fix. They're really suffering from it now, but that's only because they held a gun to the head of every pension fund and every insurance company and said, you must buy JGBs. And we haven't done that yet. But just watch what Scott does this summer. What Scott does this summer when he's going to set up all the banks where they are basically going to have to buy treasuries. That's
Yep.
what they do. But they're only going to be able because they have to do match duration. So they're really only going to be able to buy 3 years.
Yeah.
But what he might do is change the accounting rules then and say, well, that sort of mismatch in duration no longer counts. So
Right.
now we can lever up the banks to buy all the treasuries. And I
Yep.
bet that's what he does,
Yep.
because that will give them so we're a banana republic. That's what's going on. Is
Michael,
we're having
couldn't
just plates spinning, constantly spinning.
Michael, I could go on all day with this. You've been unbelievable, but in fairness, you got a life outside of spaces. You've been so generous with your time. I hope, Michael,
Oh
you've
yeah,
enjoyed. I hope you've enjoyed as much as we have, and I know the crowds love this, and it's been a huge room,
George,
and I
it's
hope.
been fascinating.
Yeah, no, but yeah, it has to. But seriously, I mean, you know what's great, Michael? You name names. You're not just coming pontificating about BS and LARPing and all. Like, what do I do?
Yeah.
No, it's been so stimulating. And Michael, I hope you'll come back in. This has been so good. And you've got a lot of friends here. You know, Tommy, Howard, Nasik, whatever. This has been awesome, and I thank you so much. And I wish you the best. And we'll be following your son's racing exploits. So don't stop posting about that. So, Michael,
you bet.
we thank you. All right.
Thank you. Have a good one, all.
Thank you so much,
Thank you.
Michael.
Bye bye.
Good night, everyone. Take care. Tomorrow we've got Rudy Havenstein. So see you guys all tomorrow, 5 o'clock. Take care. Bye bye.